I'm Eric Chemi, and this is Politely Pushy. Shamir, thanks for joining me here on the podcast. My real first question is it Sila money, Sila money, Sila money? I've heard a few different things. I think I've heard you say Sila money, but help me figure out the right way to do this so that everyone listening knows. I'm sure they've read the website, they've seen your stuff, but they're not sure exactly how do I pronounce that and why.
Well, so I'll say that I pronounce it as Silla, uh, but it also has the meaning of, I think, like force or strength in Russian and other, Eastern European languages. And there it's pronounced as Sila. Um, but I've always pronounced it Silla, and I think that's probably the official one. I'm just going to impose that on everybody else.
I like it. Impose it on everyone. That's the true co-founder spirit, right? It's my way or the highway. It real briefly, I mean, payments as a service, and we can look on the website. That's what you're going for. That's what you're trying to say. But what does that really mean? What is payments as a service? There's so many things now that are as a service.
Mhm.
Payments is new, right? It's newer. It's not like SaaS and some of these other ones. How do you define that? And how do you define what is Sila's offering? What is the Sila product here?
Totally. Um, And so you brought up SaaS, right? And there's this broad trend across the last, I'll say 15, 20 years for software to be delivered over the internet as a set of products and capabilities which you can just plug into and use rather than sort of the old model where you bought, software CDs, in fact, back in the day, and installed it on your machine and paid for it sort of one time, right? And that's been a powerful trend. It's been driven by cloud computing and just the growth of the internet, and we're part of that as well, right? Specifically, what we do at Scylla is we're a payments platform. So our core product is a set of APIs, application programming interfaces, which are used by our customers and their development teams to build financial applications. So our customers would plug into our API. They would onboard their customers, which we call end users, could be individuals, could be businesses, onboard them, verify their identity, because that's a huge part of payment and banking. Verify that identity, run all sorts of risk and fraud, anti-fraud controls, then create digital wallets and virtual bank accounts, link external bank accounts, pull money in, hold it, program with it, transfer it, and then pay somebody else out at the end of some complex funds flow, right? And that fundamentally, we enable all of that through our APIs and provide it as a service to our customers. So that's what payments as a service really.
And the customers are who? Are they other banks or are they other fintech startups that are either selling to banks or competing against banks? Who are your
It's
customers?
it's much more of the latter, right? So it's an open platform. I mean, you can go to sillamoney.com and you can click on the link to the sandbox and look at the docs and start programming and in the sandbox in like 5 minutes, right? So we try to be as transparent as possible. And so we're not against banks using our APIs. We have talked to banks who as potential customers, but the reality is that most of the people who are building applications and looking for speed and efficiency tend to be in the fintech realm or the crypto realm, right? So
Oh, you're
mostly
going to
tends to
offend all the
be.
big banks, right? Hey, if you want to be fast, it's not them, right? It's somebody, it's a startup. It's not the big incumbents.
That's exactly right. And it's not like the big incumbents aren't trying. They're trying to be as innovative as they can be as well. But it's hard for them to move that much quickly given their size and their scale. And they get into a lot of the not sort of not invented here problem, right? All the big banks and even the medium-sized banks process, I don't know what, billions of dollars of trillions in some cases of transactions, but they do it pretty much the same way it's been done since like the 80s and 90s, right? So they have all this legacy technology. And whenever they try to do something new, the instinct is to just go and use that legacy technology, which has massive scale, but is also extremely inflexible. So we have had situations where we have talked to teams at banks and they want to use our APIs, but they can't really. It's like, hey, we built our POC on your API and it works, but for production or for things, you're going to have to go and spend 18 months working with some internal thing that isn't, that doesn't really solve our problems, but that's what it is, right? So that kind of problem doesn't happen at fintech startups nearly as much because they don't have that legacy technology.
Is there something to be said? And then we'll get back on track here. But this made me think of it. The banks, you always hear, oh, they're running on super old code. You hear things like COBOL and Pascal. You hear stories about like the banks run on really old code, but it's so secure, right? It's been running forever and no one hacks it because it's immune to viruses or certain things because no one even knows how to do it. Like you hear those stories, right? What's your perspective on the idea that in a way there is more security because the code is so old? It's like the Roman concrete that they used to build the Colosseums.
There is an element of truth to that, right? It's called security through obscurity. It's almost like a joke, but it really happened to me. This was like 5 years ago, 4 years ago. I took an Uber in San Francisco, and going over the Bay Bridge, I started talking to the Uber driver, who was in his, I guess, early 70s, and he was a computer programmer who had spent his whole career programming and then retired and then didn't know what to do and was bored. So he started driving for Uber. And then he had a sideline where he would still go in as a consultant to the banks that he used to work for, and get paid like really good money to work on 40-year-old code. Right? And I was like, why are you driving for Uber? He's like, I just get bored. And I'm like, okay, fine, I see your point. You just need something to do. It's not for the money. But that's exactly right. The kind of, I mean, I learned how to program with COBOL back in the 90s, but there aren't that many people who know how to do it. So there is an element of security there. It's all of that code, and those platforms are highly buggy, and they don't meet any modern security standards. But it doesn't really matter that much because they're typically not on the internet. They're older than the internet, so even getting access to them to try and hack them is very hard. And if you did, most hackers out there don't even know where to start with trying to hack COBOL, right? It's all undocumented. If it has it has tons of holes, but you just don't know where to find them, and those skills have died as well. The problem with that is all of that is also true when you want to do anything innovative with it, and you're like, hey, we have this 40-year-old core processing system, and we want to build a new mobile app to do money movement or whatever. And you're like, well, the mobile app is easy enough to build for a good development team. But when you try and connect it into that core, you're like, how? Right? It doesn't have any interfaces that we know of, and it's not documented. And we need to make three changes, but nobody alive knows how to do that. So it's you get into this thing where I remember I worked at BBVA for a while, and we once had to spend, I don't know how much it was. I think it was like 100K, and it took about 6 months start to finish to expand one particular field, which was like, I think it was 6 or 8 digits, and we needed to expand that field to 12 digits because we needed to store some new numbers in it that had gotten
Oh,
larger.
forget about it. Yeah, that's like you might as well just get another job. That's never going to happen properly, right? Like it's going to just destroy everything.
It was just crazy. I'm like, I could go into any modern system and get this done in like an afternoon, right? And it's like it's not running on a SQL database, and it's not, yeah, it was crazy.
So, what is your background? Because you mentioned, let's say you were at BBVA. Is this your first startup? Were you a fintech guy originally, working at banks, doing tech at banks? How did you get to this point? How did you get, and why did you decide, hey, we need to make this company to do payments as a service?
Oh, that's a story. So let's go on a journey here.
All right,
uh,
buckle up.
I I used to be a software engineer 20 years ago. Came to the US, and then went to business school, became a consultant, and then in 2009, a friend of mine from business school sent me an email saying, "Let's start a retail bank." And that's how Josh and I founded my first fintech startup, which was a neobank called Simple, pretty much the first neobank anywhere, actually. And the word neobank didn't exist when we started working on it, and there wasn't any infrastructure. There were no payments as a service, banking as there was none of these as a service platforms available. So we had to kind of build everything ourselves, and we had to figure out the partnership model, FBO accounts, how to do KYC that a bank would be happy with, and all of these things. And it took us 3 years from beginning to work on the idea to actually launching Simple. And then Simple was acquired by BBVA in 2014. That's how I ended up coming to BBVA. When I was at BBVA, I heard about this idea of building a platform. And my immediate reaction was like, yes, please do this. The world needs API platforms in banking. And if anything like that had existed, Josh and I wouldn't have spent 3 years launching Simple, right?
But also, I pause you there. You said the world needs this, but why did you think? But I'm the person who will provide it to the world, because there's a very big difference in those questions.
Yes, and initially I wasn't like I'm the person who's going to provide it to the world. I was like BBVA, you should provide it to the world because you guys are forward thinking. You actually have better technology than most banks, in at least in the US. And it seemed to make sense that they wanted to do it. So I kind of encouraged them to do it and became an advisor, but realized that they just didn't know how to do it, and they didn't have like that they had the top level vision, but they didn't have any kind of like really thought out strategy of how to build and ship and scale a platform. So I kind of started advising them on that, and it was slippery soap, right? Like I advised them more and more, and then they were like, "Hey, we're going to spin up an internal ventures team, and would you be interested in joining it?" And 6 months later, I had left Simple, moved to BBVA, and I was running API platforms for them globally. Did that for a couple of years, and we built and launched two API platforms, one in Europe and one in the US, and even signed up some customers. But I realized that like the big bank pace of change and the kind of the things that I could do within the bag just didn't work for me, right? Like I was like I just got frustrated and ended up leaving in 2017, and then founded Sila in 2018 with the goal of making it easy for builders and innovators to build and ship financial applications and to program with money.
Such a fascinating story. It's like you didn't predict to get there. I think that's what's interesting, right? You couldn't have said, if you look back 10, 15, 20 years ago, there's no way you would have thought, I'm going to end up in this position. I'm going to end up doing this. You couldn't have planned this out on your resume.
It's even worse than that. I feel like if you'd asked me 20 years ago, and I would have explicitly said that I will do anything except that. And then there's a story behind that as well. Weirdly enough, I come from a long line of bankers. My parents were bankers. My grandfather was a banker. Uh, Half my family on my mom's side is a banker. So I kind of grew up, running around bank vaults in the 80s and 90s, and learning to count cash because it was all paper based in India at that time, right? With computerization was just happening in this like the late 80s and 90s. And so when I went to college, I was like, okay, I'm going to study computer science and physics, and then I'm going to go become a software engineer. Uh, and look at me now.
it's it's an interesting story, right? Like it's the family experience, what you grew up with, what you know, the maybe it's genetics, it's probably more environmental, but it is funny to see how that ends up there. Right? To think, yep, I'm a banker like everybody else, right? Just it ends up all the same. But banking's changing, right? So it's so different now than the 80s and 90s. In the last 10 years, there's been so much development. Give me an example of like what your customers are doing that's so modern. Like what are you even surprised by? Like when you provide your platform and then a fintech, presumably another startup or something maybe mid-stage, they're really able to get some traction. They're using your product. What are they doing to then help the end consumer? What's innovative to you that even you were surprised to see? I can't believe my customers are using our platform to do these things.
Right. And there's many of them, right? Like there's folks doing like B2B payments in so many different industries. and a lot of like PFM apps, a lot of some crypto apps as well. One which I love is always kind of everybody has their kind of favorite customers, right? Is this company called Ava, which does credit improvement for low to moderate income Americans. And it's a couple of founders who came out of Credit Karma, uh, great guys who really understood how credit reporting works and how you can build basically a PFM app where customers can sign up, get a credit card, and put some of their payments, their recurring payments on that credit card. And behind the scenes, Ava will work to help you understand what's wrong with your credit, but also potentially improve your credit score by 50 to 100 points, right? Which is huge for a lot of people. And They came to us 2 years ago and signed up, and they use us as kind of the hub of their system, right? They have a bunch of other partners who do things like virtual card issuance, and what we do for them is that they use the platform to power their ledger, their payment processing, their KYC and KYB, so their end user onboarding, and they rely heavily on ACH, and that's a big part of their business, and that's one of the areas that we specialize in. So it's worked really well for them, and I'm very proud to see them scaling and helping more and more customers. Right, the improving a credit score for somebody who's kind of in that 550 to 650 range can be transformative, and the in that ability to get a student loan, ability to get a home loan, or just improve your life, or get a even rental applications now are so dependent on your credit score, right?
It's so true that there's a lot of things that are using credit scores, which leads into a whole other conversation. We may not have to have it here, but are these credit scores even appropriate for these things? They weren't designed for these things. It was never meant for an apartment, right? It was never meant
Yeah.
for all these other issues, but it is what it is. Sort of like social security numbers were meant for social security, not for like when we talk about KYC and
Not
identity.
as a primary national identifier, which the US doesn't have one,
Right,
but in the absence of one, the social security number has become that.
right. But it
And as you
wasn't
said,
designed to do it.
was never designed to do it, and sadly, it was never built with the security in place that you would for a system that was designed to do that, right? Which means that now on the dark web, pretty much everybody's social security number and details is available. So it
You
leads to a
laugh,
ton of fraud.
you laugh, and it's like, hey, this is a huge problem. And you laugh because it's what are you going to do? I'm curious, what do you do? How do you bank yourself? Like, I used to live in Manhattan. I never used a check. Then I moved out to the suburbs, and you're dealing with all these contractors. They only want checks, and checks have your account number right there, your routing rate number. It's a piece of paper, your handwriting. And I write more checks now in the burbs than I did in the city. And people want your social security number every time you go to the doctor's office. Like, why do you need this? Right? There's so many things. How do you personally try to manage your own risk from a financial and identity point of view? Because you know a lot more, you know too much.
Yeah, and I think there isn't any like foolproof way, right? So and especially I have like really complicated finances just personally because my wife is from Spain, so she has a bunch of like her family in Spain. I have all my family in India. We live in the US, so just the just all the different accounts we have, and then I've been in fintech now for whatever 12, 14 years, right? So whenever I see a new service or something that's cool, I'll just sign up for it, right? So I probably have like $100 in like, I don't know, 6 different neobank accounts.
Oh, really? Oh, you're all over. You're getting all kinds of data points. You're getting all kinds of market intel that way.
Yeah, yeah, and I don't do it as much as I used to anymore, but for a while there I would sign up for everything, right? It just got too unmanageable. But
I
kind
wonder
of
what that does
the
to your credit score. It's like this guy's
not it's
got too
not
many
great.
bank accounts.
It's not great. It's not great at all. And I have run into issues with that in the past, where it's been like, my credit score was down, not because of any actual issues with it, but just because I tried to sign up for like 12 different services in a period of like 3 months, right?
That's a red flag. At
That
least
is
the
a red flag.
algorithms think that's a red flag.
They do. They think you're applying for tons of credit, and that's a pattern for people who are about to default. Is that they go and apply for a lot of credit and borrow a lot of money so they can pay off other people. So they see that, they assume it's that, and then you get hit. Right? So the things that I try to do is, I mean, I try to do the same. Right? Whenever people request my SSN, I try to like push back on that and be like, why do you really need it? But in many cases, you can't avoid it, right? So I I check, I monitor everything, and that's why I'm like, I look at my transactions, I look at my credit cards. I Even though I have a lot of different services, there's only one or two that I really use actively
Right.
and keep my core finances, and those I monitor heavily. And then I'm like, yeah, you look, if you hack one of my neobank accounts and you get the $100 in there, too bad. It's not something that'll bankrupt me, right? And then I also am very careful about my PII, right? So I cut off the labels from all my envelopes and shred those. The old school dumpster diving way of getting information is not gone yet. And it's not the primary type of fraud that you see online nowadays, but it's also not like it doesn't happen anymore. So I'm like, you kind of have to stay frosty on several different levels and keep track of everything. I mean, I would say that everybody in this country should be keeping an eye on their credit score at least once a month, right? And anytime you see something like funky happening there, that's something to go understand. Is like, hey, why is this set of new accounts that opened up in my name, or what happened, right? The other part of it is just to stay frosty. I get um, like so much spam. I get so many text messages. Every employee at Silla, it's almost like an initiation in the first month. They get a text message from Shamir
Oh, like a fake
asking
one,
them to
like a
wire
fake
money
person.
somewhere. Completely, it's all fake,
Yeah.
right? I never text message employees. I use Slack, and uh, and so there is so much fraud out there that you kind of just have to be skeptical constantly of everything, especially stuff like text messages from numbers you don't know, and random emails asking you for information, or even asking you to click a link.
Right. What, and I'm glad you brought this up because what is your own platform doing to help monitor fraud, reduce fraud? So you mentioned it from the personal point of view, but now you reflect a normal consumer. So your customers, your business customers, your fintech customers, what are they doing? How are they using your platform to try to reduce fraud, in aggregate?
So we have a set of anti-fraud tools that are built into the platform and available for customers to use, and it's very much customers' choice, right? I mean, there are still customers and applications out there, especially in the B2B space, where they'll see one case of fraud every 3 or 4 years, right? It's almost zero. But anytime you're in like high volume, especially in like consumer online, you're going to be hit by fraud. It used to be you'll get hit by fraud within 6 months of launching. Now I'm like, it's probably within 6 hours of launching. There's just
That's
so
pretty
much.
good marketing, though. If all of a sudden, hey, you launch and now the hackers know you're in business. So many companies are like, no one even knows we're out there. We launched and we don't have enough PR, but hey, well, the hackers found out you're there.
But the thing is, the only people who will find you is the hackers, all right? So
True. True. It's the
I've
wrong,
seen
it's the worst customer.
it's the worst customer. And I've seen so many cases of people who are like, hey, we launched, and then for a few weeks there was like little activity and we were cranking along, and then we just hit the mother load. We got all of these customers within like a day or two,
Oh, and
and now we're going to
they're all the
take.
bad guys.
And whenever I hear that, I start like, "Ugh."
Oh, I
Are you
see.
sure? If you don't know why this happened and where these customers, I mean, if you went and did something on Product Hunt or ran a big campaign or
Right.
whatever, that's fine. That's expected. But if this was just random, it's almost certainly fraud. You're very quickly going to find out that none of those are real people. And the only question is like, how much money have you already lost, and how quickly can you stop it, right? And so there isn't any one size fits all approach to fraud. It's very much dependent on the use case, the application, the customer base, and every customer of ours has to kind of figure it out for themselves. But we provide a lot of tools to help them with that, right? Everything from like transaction controls, um, we have products like instant ACH, where we make ACH payments, which typically take like 3 to 5 days to
Right.
settle. We make it instant, and we run those customers through a set of like fraud, anti-fraud controls, the obviously KYC, but also device ID, matching the data we get from the bank against the data that they gave us, and all the other sources, doing an SMS call out to their phone and getting that data and matching that as well, and then running it through our risk scoring system, right? And then saying, hey, this customer scored high enough, they're almost certainly a good person or a good real human being and a good customer. We can make their payment instant and guarantee it. This other one didn't score that high. That doesn't mean that they're a bad person. It just might mean that they switched their phone in the last week.
Right.
uh,
Any new phone
right.
number is going to look like a problem. That's going to hurt your score versus someone, hey, they've had the same phone number for 20 years.
Exactly. It could be just that they switch their phone. People do it all the time.
Right.
At the same time, well, that's one of the common ways of hacking somebody is to hijack their phone. It's called SIM jacking is one of the common ways in which it's done. So you kind of you probably want to take these customers and then run them through some other process, right? Like process that payment, but hold it for 3 to 5 to 7 days, depending on the risk tolerance and the business and everything else. Maybe request additional documents like a photo of a license or a passport or something. It's a bunch of different additional tools you can deploy. But these are kind of your good customers that are pretty confident are good. And here's the ones that are more problematic, right? And that customers can use those tools to and then build their own on top. There is no, as I said, no silver bullet, but there's a good set of basics that you should start with pretty much from day one. You can't really even wait for like 6 months nowadays, because you might be out of business in 3 with the kind of fraud that you see nowadays. It's like it's crazy, the amount of automated fraud that happens on the internet. It's just spiked since the pandemic.
Right. Right. It's been real bad since then. But you said a couple of things like depending on your risk tolerance, right? You said 3, 5, or 7 days. Are you making that decision, or is that your customers toggling of when they use Scylla, they can decide how much risk tolerance they themselves want as a fintech company? Who's making that call?
So we make some of those when we process the payment, and then when we indemnify customers, right? But most of the time, it's customers who are doing that, and we are providing the tools for them to be able to do that, and say, hey, the funds may be available in the wallet, but there is a risk with ACH that you could see a return for up to 60 days later. Right now, you can't wait 60 days, but to get to zero risk, but the risk slopes off very quickly, and by 7 days you are at like 99.9% certainty. And so are you comfortable with 98% certainty, 99,
Right.
99.5, or 99.9? And that's the 3 to 7 days. Or if you really need 100, then you might wait 10, 15 days.
Right.
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 And that depends on the business and what they're doing with those funds and what the kind of the process is, right?
From a KYC point of view, what are you doing that's different than, let's say, your competitors? Because obviously there's a bare minimum, a bare standard, right? KYC, anti-fraud, these kinds of techniques and risk scoring systems. Everybody's got their version of it, but what makes you stand out when you're reaching out to prospects and say, you should work with us as opposed to something different?
Right. So we kind of the thing that really differentiates us is our expertise in ACH, right? So there's a lot of things that happen over the ACH network which introduce additional risks, but if you use them smartly, you can manage that. You can manage that risk better, right? So, like I'll give you an example. The the return timings for some of the standardized returns, like an insufficient funds return, is there's a limit. Like the bank on the other side has to send it by 2 business days, basically. But in reality, most banks do it faster. because they look at the account and they're like, there isn't enough funds here. They just process a return, and so sometimes you see a return within 1 day, sometimes you see a return within 2 days, sometimes you see a return within 3 days. You can look at this by routing number, and you can know pretty well what the return timing is going to be, and you can tune your funds availability based on that, right? So it's not it doesn't change the things you do upfront, but it does change your overall risk profile and might allow you to make funds available faster when you're processing with certain banks, because you know that the return window has already passed, and that bank will always send you a return quicker. So the end result that people are looking for, I mean, what every customer wants is instant risk-free money, right?
Who doesn't
And
want
and
that, right?
Exactly.
Yeah.
But the kind of, there is no magic bullet to get there. Kind of there's the only way to really improve the whole system is to kind of build whole new payment systems, right? And that's happening. RTP and FedNow are coming, and people are beginning to use them, but we're still probably 5-10 years away. For now, the game in town is ACH, right? And what we do really is to combine state of the art KYC and anti fraud controls with our expertise on ACH to help you tune that you know conversion versus losses, right? Like if you say, hey, listen, I want to convert 100% of customers, I'm like, yes, you can. Just be aware that it's possible that 20, 30, 50% of them may be fraudsters. And you're like, hey, how can we add in a little bit of friction that is smartly reduces our fraud losses by 99%, but our good customers by 1%. And that's where we specialize.
How will this Fed now rollout affect ACH and your business model, your customer's business model? This is a big shift here.
It is, but not nearly as big as some people might expect, or at least not as quickly as some people might expect, right? So, RTP, which is the real-time payments network, which was launched by the clearinghouse, which is a private consortium, has been around now for 3 or 4 years, and it's growing. It's growing rapidly. I think it's in the. I haven't seen the numbers for 2022, but it was in the 50 to 100 billion a year in payments volume range, right? And growing something like 50% year on year. And that sounds like a lot, and it is. Uh, but ACH at the other end of the scale is processing something like 73 trillion a year, right? So and Fed now hasn't even rolled out yet. It's going to roll out. I think Q3 is the latest date that I heard. So even if you took Fed now and RTP and assume that they grow at the same rate that they're growing at right now with RTP, like 50% year on year, and they grow like that for the foreseeable future, and there's no slowdown in growth, as typically happens as you get bigger. And if you assume that ACH doesn't grow at all, it will take something like 14 years for FedNow and RTP to overtake ACH, just because ACH is so gigantic, right? And I think that's the realistic change that's going to happen is that over the next 2 to 5 years, a lot more use cases, and it's going to be quite use case specific, will start switching to FedNow and RTP because it just makes sense. But then a lot of use cases will stay on ACH because it doesn't work for them to use FedNow and RTP. And eventually ACH, which is still growing 8-10% a year, will slow down, and FedNow and RTP will overtake it. That'll be in the 2030s.
That's a long time from now. So
Old payment systems just don't die, man.
it's
Like
like your old code, right? The Uber driver's code from 40 years ago. Like that'll still be floating around.
it will, and it's kind of like payment systems have such massive network effects that, I
Right.
mean, like any payment system that had like substantial adoption across geographies in the entire history of mankind is still being used today, right? Whether it's coins, whether it's cash, whether it's checks, gold, pe- pe- they used to use gold for payments a lot before World War One.
Salt,
It's still,
I heard salary came from the word salt, right? You're worth your salt. That was how they paid
yep,
the Roman soldiers, right?
exactly. The salarium was a salary. It was a payment in of salt,
We
and
don't do
the
that
that
anymore.
they don't do that anymore. And in fact, that changed even during the time of the Roman Empire. They switched to using, denarius and coins pretty quickly. The salarium was in the early Republic days. Um, but yeah, the famous example of like the Pacific island where they used like giant stones for payment, they still do that now for very ceremonial use cases.
Oh,
They
really?
don't use it for day-to-day currency. But yes, you can go to the island of Yap, and if you get married there, somebody might roll out a giant stone for your wedding.
That's like the equivalent of our $100,000 bill, something like that.
Something like that. Yes.
I don't even know what I would do with that. Yeah, it's like that's like here you go. Here's your giant rock. It's worth a lot more than all. Would you have one big rock or a lot of small rocks?
You might not even get a full rock. You might just get a slice of the rock that was allocated to you, and everybody in the community understood that that rock in your father-in-law's front yard, half of it belonged to you now.
That's so amazing. But I like what you're saying. Like every payment system that had a big network, we still use today.
Yeah.
So I have to think about that one. That gives me a lot to ponder. It's sort of like we still use the radio, right? We use
Yeah.
FM radio, AM radio, even though we have all these other ways of communicating. One thing that I wanted to ask you about is there a company, a type of company out there where you would say maybe you shouldn't use payments as a service? Maybe you should go ahead and build all of these things yourself and stay on top of all of these trends and do your own, payments and do your own banking understanding and do your own everything and KYC and all this stuff. Is there a customer out there that exists in this modern world where it's like the need is so niche that they shouldn't sign up with you?
I think uh, uh, I think it's at the massive end of the scale spectrum, right? Like, uh, should JP Morgan Chase like switch its entire processing to Scylla next year, or and I just say that as a joke because I
Right.
I don't even understand how they would do that. They literally process trillions, and I would say probably not. That where we shine is when you're building new
Like from
applications and
scratch. Like
doing
you've
it.
got zero customers. Let's build this now and then we can get people on it.
Or even if you have an existing customer base but you want to transition them over to something new, right? If you already have massive scale, and you already have direct access to the backend payments networks and all the licenses, there may still be specialized cases where it would make sense for you to use Scylla, but that's probably not the that's really not where we play.
What is your biggest challenge right now then in terms of getting companies to sign up? Like, is it the awareness that we're out here, or is it the difficulty of, okay, if we switch over, is it actually, VC funding is down a little bit the last year. The economy is a little bit shrunk. Maybe there's fewer startups, so there's fewer people who have an opportunity to do this. Like, what is the current challenge from your point of view?
It's actually funny enough, it's all of those three,
Okay.
right? So I'd say awareness continues to be the single biggest thing. It's like probably 99% of our potential customer base has never heard of us yet,
But
and
like
that's
as
going
soon
to
as they
stay.
do, is it one of those like, oh my gosh, now that I know that they're here, I'll just go ahead and sign up?
No, I think these decisions are really more like they're more like business decisions. So they tend to be, made after like careful consideration. But it's just people are like, hey, now that we know you guys exist, that's like, okay, how could I do this? Now I know that there is an option, but I still have a ton of other decisions to make of like, hey, does your APIs work? When am I actually going to start working on this project? And blah 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 blah. So it's not a instantaneous decision. It's usually a decision made over a period of time, and that's fine. These are big decisions, and customers who build on top of us, we will be one of their core partners for the foreseeable future. So we appreciate that. What we have seen is that just in the last like 6, 12 months, we've actually gotten more inbound interest and more customers who are like talking to us, and the kind of the pipeline, the sales and marketing pipeline has gotten bigger, but it has also slowed down with a lot of people taking a lot more time to think through these decisions and place their bets a lot more carefully, and also especially for the bigger customers, they're just pushing off projects, right? And they're like, hey, I know I need to do this, and it is a priority for 2023, but I'm pushing it to second half of 23, not starting Jan 1, right? And I think it's just emblematic of, well, the entire industry. VC funding, of course, has shrunk, and everybody is like tightening their belt, and there's tons of layoffs. You can see all of that in the press. I don't know if you're in a recession yet, but it feels like there's definitely a fintech recession happening.
Yeah, that's for sure. Regardless of the macro overall country, there's definitely a fintech one. So, what are your thoughts on this year? 2023 just started. What do you think is going to be different this year compared to, like you were saying, what was happening the last 6 to 12 months, either from an economic point of view, a tech point of view, or a customer point of view? How do you see the next few months here?
So I think you know the reports of the death of the economy have been greatly exaggerated, right? We may be heading into a recession, definitely into some sort of a slowdown. But the US and the world is still in many ways recovering from the pandemic, and there is still a lot of growth to happen, especially in fintech. If you look at global financial services, it's something like a 20 trillion revenue industry out of a global GDP of like 100 trillion or so. And out of that 20 trillion, everybody in fintech and crypto combined, from like, PayPal through to Sila, all of us together are maybe 1.5%. I don't think it's even 2% yet. And that's a lot more PayPal, right? Than Sila. But this decade, I think, is going to be where we go from like 1% to 10% market share. So it's not like the big banks and the traditional incumbents are going to go out of business. That there isn't going to be like a blockbuster movement in this industry. It's just too large and too complex and too heavily regulated to change at that pace, right? But it is going to grow. Fintech and crypto and all of us are going to grow like 10x through this decade. And we're still very much at the early stage of that. But just like in the dot-com boom, it's possible for the investment market to get ahead of
Right.
even the greatest trend, overinvest, have a correction, and then see 10 years later that all of those predictions came true. It just took 3-4 years longer than the crazy dreams of like 99 or 21.
What's interesting from your business model, I think of it like the gold rush. It was the people searching for gold and the people that were selling them the axes and
It's and
shovels.
shovels.
You're selling the shovels, and as long as you're selling shovels to enough different companies, one of them is going to take over the world, but you will have been there back, behind the scenes. So you want to just see the overall fintech community grow, but you know what I'm saying? Like you're more diversified in that industry than picking a single champion there.
Completely. In some ways, we don't have the same investment like model of a VC where it's like one investment in 10 makes you 10x or more, and that's
Right.
where you win, because all our customers pay us, right? The smallest ones and the biggest ones.
Right.
But the ones that really hit it big and grow like crazy, those are the ones who tend to become our biggest customers and drive a lot more, right? So it's like if you look at like a typical SaaS business, the difference between their smallest and their largest customer might be 2x, 3x, 5x.
Right.
In this business, it's like 10x, maybe 100x.
Right.
Right?
Exactly. Shamir, thank you so much for the time. This is fascinating. I have so much to think about here. I have a long drive coming up tonight, and I have a lot to ponder just about how the world works, how modern finance is changing so rapidly. Even though you're right, those percentages, they're such big numbers that each 1% move of market share is a huge shift. Thank you so much for the time and walking us through the Sila Money story and the broader ecosystem that you're part of. Thank you. Thank you again.
My pleasure. Thank you for having me.
Thank you to my guest, and thanks for listening. Subscribe to get the latest episodes each week, and we'll see you next time.